Alrighty, I'd like to welcome everyone to the live spread trading today for January 4th, 2017. This is Kevin Hurley substituting in for Jeffrey, and I am glad to be with you here today. As always, let's get our disclaimer out of the way. This class is a production of Safe Option Strategies, and the content is protected by copyright. Any reproduction or redistribution of this or any Safe Option Strategies presentation is strictly prohibited by law. The information presented in this class is for educational purposes only. Safe Option Strategies does not make any recommendation to buy or sell stocks or options. Trading stocks and options comes with risk, and you are solely responsible for any losses you may incur as a result of trading. Any live trades discussed in this class are additionally for educational purposes only. There is no recommendation, implied or otherwise, to place these trades with real money. So today, guys, we're going to go through live spread trading, and I have set up some notes. When I'm going to look at some live spread trades, I always look first at the indexes. I create a list of opportunities with stocks, and then I do my technical, good thing I'm spelling so well, analysis. So let's talk macro really quickly. Oil and FMC minutes today. To see what they think of Trump, oil, world policy, and future U.S. growth. What else do we know about? What else is a macro event that I don't want to say punishes, but that that definitely will affect our markets? We had the petroleum status report. More importantly, let's just call it OPEC oil cuts and who will fill the extra OPEC is cutting. Libya already said, hey, if OPEC cuts, we've got more will flood onto the market. And then we have the inauguration, I'll take that. On the 20th, right? What else do we have? Jobs report. So we have actually the average work week, which is non-farm, right? Private payroll. God, I can't spell today. Private payroll. Average work week hours. Hourly earnings. And that's right, it's not this Friday. We had that last Friday. Where's my calendar at? My calendar says, no, that's this week. That's January 6th. And yes, it's not today, it's this Friday. Some big numbers coming up. I can think of one other thing that's not mentioned here. We have Dow 20,000. Probably not going to make it, right? And we have hopium. And the hopium is based off of Obamacare repeal, corporate tax reform. I might also suggest that it's kind of interesting. Bring it back home money, right? Repatriation of money overseas. I might tell you to keep in mind, right? Last 2 years, big pullback in January through mid-February. Typically, it's not a growth month. You see some pullbacks. People are catching up from Christmas. We did obviously yesterday see some new money come into the market. Good to see, good to see. States raising minimum wage will affect small business. But we've got a lot going on here, don't we? In some states, we do have U.S./Russian, how do you say it? We'll say it, relations due to possible hacking. And it sounds like Trump will now look at that. Yesterday, he was like he was going to, is going to push that off till Friday. Pretty interesting. Boy, all of a sudden we got a lot going on. If I take a quick peek, let's look at a calendar. There we are. We're just kind of sitting here in La La Land. The reality is, we spent such a long time in an overbought territory on the RSI. I think we're consolidating. In fact, if anything, look at the risk to the downside. I could make a definite justification to see us head down to that 18,600 level again. On nothing more than, hey, let's have a bit of a correction. We've run too far too fast. We have another comment. Julie just made the comment. Russia's escalating its military presence in the South Pacific may increase market volatility. I agree. In fact, it's kind of weird. I'm pretty sure Mitt Romney told us all this when he was running against Obama 4 years ago. And at that time, he was made fun of. But boy, did that man seem to have it right. Boy, did he nail that right on the head there. So consolidation, yes, consolidation works both ways. David just made the comment. We could be consolidating for the next leg higher. We could be consolidating for a pullback. It's kind of funny, if you went the probabilities are for a pullback, that we've gone too far too fast, that seasonality or historical timing, we have our pullback. But that does not mean that some good news, I guess, along our new president, and we can see a definite continued upward movement. It was funny because Jeffrey and I had this conversation a couple of weeks ago. We'll see Dow 20,000 before the end of the year. And I said, no way. Too many block orders, level 3 trading, too many block orders are stacked up at 20,000 to sell off. It's a big round number. It's a 10% jump up. There's just a lot of block orders that apparently seem to be sell orders right now in the at that 20,000 mark. Jeffrey comes back and says, well, we'll hit it, it'll be brief, and then we'll sell off. So I kind of said, no, I don't see it. The correction's coming before the egg, so to speak. And we're debating that one back and forth. But short and simple, Dow's consolidating. The S&P 500 is consolidating, but in a wider range. We actually have stagnant highs and lower lows. And then if you look at the NASDAQ composite, it looks like it's rolling over. Well, Kevin, we're bouncing off of the median line on the RSI. We're not anywhere close to our 50-day simple moving average, which is the blue line. We do have the precursor of the MACD going down. If we studied a little bit more on our S&P 500, I think you're going to see a lot of the same thing. Rollover on, MACD has its crossovers to the downside. There is quite a breach of distance between the 50-day and the current price of the S&P 500, and obviously I think you'll also see that on the Dow. And it's because we have that gap between the 50-day and the 200, that pull away, and a precursor on the MACD. That's where you're going to see some people talk to you and say, it's run too far too fast. There's too much of a widening between the 50-day simple moving average and the current price of the Dow Jones. And all they're trying to say is herd mentality, is that it's moved too far too fast, meaning that you're going to see people wanting to take profits. That's all. We're looking at some possible profit taking. Julie says, do you think it'd be a good time to buy some volatility February, March expiration? A couple days ago, last week, Julie, I did spend money on a directional March 220 long put. I sprinkled a couple $1,000s in accounts across the board on $10 million or so. I put in 125 March 220 SPY long puts just to be safe. Just thinking, again, looking at the SPY or the SPX here, I usually will trade the SPY. Seemed like we could have a bit of a pullback, so I wanted to make sure that I'd be covered. So I did get some March expiration long puts. Now you particularly said volatility, so maybe a trade, and I've liked this trade for quite a while, is a VIX trade. VIX went back down to 12, can kind of get up to 13. I've liked for quite a while an out of the money bull call spread. If we wanted to play volatility and things might get rambunctious, we might get a significant move up or down or so forth. We know it likes to go up to that 20 range. It really doesn't stay much above it. We could do, if you wanted to play a volatility play, one of my favorites has been the VIX bull call. Because we have uncertainty, because some things are coming up, because we're going to have a president that's not of the establishment, Love the fact yesterday he said, hey, you dummies, your first order of business is to disband the ethics committee? Really? That's what you're going to choose to do as your most important first part of what you'd be looking at? I'd be looking at the VIX thinking, you know what? We're probably going to get into some volatility. We've already looked at the chart, right? Hey, we appear to be back down around the lows. Could go down to 211, could go up to 13.93. So got a dollar down, 2 to the upside. Very interesting. I've used this trade, I've done it significant amounts of times. Good opportunity for the VIX if we can ever get our option chain to come up here. Great opportunity to do a VIX bull call, and I would do an out of the money bull call. I would most likely be looking at the March 22nd. If we chose the March 22nd expiration, I'd be doing a 2026 or a 2028, wanting some upside movement. Let's see what we get for some pricing here. But what a great opportunity to take advantage of some VIX movement and to place a trade that's relatively cheap in our positioning here. Let's see. I'm going to have to need more strikes now. I'm going to have to go to all the strikes. But I see the 20 might cost me $1.40 on the call side. Let's see about getting a 2026 or a 2028. And we have a comment coming in. Please compare VIX spread to a single leg long call. Thanks. Definitely, Julie. Pretty simple. A spread offers less risk. And in all honesty, I'm all about less risk. So I would not be doing a single long call. I would always be doing spreads because, plain and simple, a single long call position, basic probabilities, has a 1 out of 3 chance of being correct and making money, which means you have a 2 out of 3 or a 66% chance of being wrong. If you have both legs playing directionally, it increases the probabilities of being profitable. Good question. So I'd be looking at spending $1.45 on a long. I'd look to short a credit of, boy, I might as well go to the 65 cents. It's only 15 cents for $2 more, but it hasn't gone above, 24. So, yeah, in all honesty, I'd be looking at spending a March 22nd. Yeah, I'd spend $1.45, taking a credit of 65 cents. I would really like a volatile play on the VIX. Kind of a no-brainer, but only because I've done them in the past. And really, it's a March 22 of 2017. So it's just a March 17 monthly options expiration. VIX 2026 bull call. So you're going to bite open, the March 20 long call for $1.45. I would sell to open a March 26 short call for a whopping 65 cents. Net debit in the trade is only 80 cents, or, right, $80 per contract. I'd probably do 5 contracts. For 400 bucks. And if the VIX went down to $11.50, I would add 5 more contracts. And I'm giving myself plenty of time for this to run out or run through some type of small pullback in January, February. Now, little interesting point that I look at. Well, what's your primary exit? My primary exit would be a run up to this $19 range. I'd start to look to be exiting not based on a profit per se, but on technical analysis. Up at $19, I might choose to take away some of my gains. Get out of Dodge here. Looking at the deltas, right? 20 has a delta of 0.38. The 26 has a delta of 0.19. So I'm only looking at about 18 cents per dollar movement up. From 12 up to 19, we're talking $7. $7 could net me about what, $1.40 of profit roughly. So I am looking at being greedy. I want a definite 100% return. But I am going to spend a little bit of time just going over deltas, where again it was what, 0.38 minus 0.19. I hope not. My numbers don't add up then. 0.38, 0.19. Which equals about 19 cents, and this is in theory, per $1 movement up. And I would exit the trade around the $19, or I just say the 19 VIX strike price. Could you just take the $1.45 and go for it, do a directional? You could definitely do that. And with Thunder, with 5 contracts, it's a $520 trade, $530 trade, not a bad trade, but I'd be looking for a little bit more. I'd be looking for some protection. It should definitely break through the 50 and the 200-day simple moving average. It's just something that you don't know. You just don't know. So plain and simple, I will always spread trade for protection and less risk. Great question though, Julie. And there's an awesome VIX position right there. I mean, this is one I'd feel comfortable entering today myself. All right, are there any other stocks you'd like to look at for a possible options trade? Now, something to keep in mind that we have not discussed, that Alcoa earnings is, I think it's estimated at the 31st of 2017. So we're going to be into an earnings season starting basically beginning of February on. But, Julie, great opportunity, great trade, great play on the VIX. I like it. Interesting volatility trade. Julie, would you clarify my strikes? Yes, the short position is, why wouldn't I do a 12? Why wouldn't I do 11 long call? Why am I going out of the money? Why am I choosing a 20, 26? Well, I'm going to look at the chart in the last 6 months here. And number one, what I don't like about the trade is we have to break right here. Can we break that? Can we break through that? Well, we did it 1, 2, 3 times in the last 4 months. So yes, we can break the 50-day. We can break the 200-day. No worries, no questions. Definitely. We could definitely break through that. But because we have those here, because I see lower lows on what appears to be a top, here I'm putting a bullish trade with a negative crossover with some 50 and 200-day bullish crossover. We don't have technical crossovers to give us one direction or another. So I'm playing a hunch, right? But I would not go in the money. I want it to cost me less based on the fact that we got to break the 50-day and the 200-day simple moving average. For that reason, this kind of becomes a Vegas trade for me. Yes, I expect more volatility through earnings, through a pullback, through a new president, through new legislation. Yes, there's a lot of volatility that's pent up. But because we have to break two significant institutional levels of resistance, I don't want to spend a lot of money on it. It becomes more of a Vegas trade, placing a trade without crossovers, without a technical direction of bullish or bearish, in all honesty. And I have chosen those levels. I usually will do a 2028, and that goes back to nothing more than pulling out the chart. Give me a quick second. I'm going to adjust this chart just a little bit. Stick some price labels in there. Landscape it, and I want to see it because I'm a little colorblind. I have basically chosen, or would choose, the 2028 or the 2026 because of our recent highs. 26, 26, 28. You've got a 30, you've got a 32, but they seem to consolidate around that 28 range. I feel like I wouldn't really be capping myself at that 26 or 28 dollar range on the short. We do have higher highs, 20, 23, 26 would be the next step, and 28 would be higher than that. So I chose 26 because of my past history with the VIX and trading it. I've had some really good trades out of the money. And again, notice I'm out of the money looking to have to break some moving averages to get there. And what scares me is sometimes when you have those moving averages and have to break both of them, you know, you don't do it. It hits and it comes back down. So it's not one I'd be throwing a lot of money at. It would be more of a speculative trade for me, only because it's a speculative trade because I don't have a defined technical movement up or down. So it's speculative. All right. Any other trades we want to look at? We've only used up 35 minutes here. What other trades are you guys interested in? What other trades can you guys think of? If I can throw one out your way, or at least a stock to look at, GLD, huh? Well, that's pretty flat with the death cross. Julie, it wouldn't be fair to construct a GLD trade or a silver trade. Um, they're more of a commodity, and I just don't follow them. I really don't see them as a true hedge. Our dollar strengthened, gold's gone down. I wouldn't know how to trade the GLD or silver at this time. And silver I'd probably do through, what, the SLW. I am more looking at a breakout of a stock that once traded at 122. That's been beaten down because people can't calculate a $50 million loss on a $13.2 billion earnings. I really like Disney. I am ecstatic for Disney. And we've finally broken out above the 105 range yesterday with an upgrade from probably more of a no-name analyst, but with an upgrade or two on Disney coming the last couple of days. Disney has room to run up to 122. Disney typically runs up into earnings. And personally speaking, I ran a couple numbers here recently on Disney. And boy, I'm kind of surprised what you can get for a simple bull put with Disney that now gives you $1.70 of protection to the upside. I would do a $5 spread. I would be willing to take stock ownership at 105 and turn it into a collar trade or adding just a long put for a protective put. But if we look at Disney, come on, options, hurry up. If we look at Disney, I'm liking a 105 100 bull put, and I did like it the other day for January. I thought, you know what? I could pull a January long put pretty easy. By the way, guys, this is Options House. I've been with these guys for forever. This would be my recommendation on if you're looking for a broker. Options House is very simple. As I was looking at an Options House bull put, 105 gave me 69.70 cents. I saw 71 the other day. 14 cents down here. If I do 69 minus 14 cents, I've got 55 cents for 17 days on Disney. I'd be looking for a net credit of 55 cents. And this is a Disney breakout play. Bull put. Disney broke out above the 105 resistance with 2 upgrades. Buy to open a 100 January 2017 long put for a whopping 14 cents. Sell to open a 105 January 2017 short put for 69 cents. I would do a limit order for 55 cents, expecting to take stock ownership at 105 if I had to, and I would place this trade today at market close. Might as well erase my my drawings there. But Disney breakout seems to be going higher. It's one that I would be willing to own, which means I might do 10 contracts. I could probably only afford 600 shares, so I'd be looking at it, you know, hey, I might take ownership on 5 contracts. I might close the other 5 long puts down, and I would need some extra money because I would then add, you know, a March 100 long put on Disney, expecting to take stock ownership. You mentioned First Solar. I would not be playing First Solar at this time. First Solar has huge upside potential, but First Solar has moved more often than not on the tax credit. And tax credits aren't going to come into play until, again, the end of 2017. I think they extended out another year. So First Solar's big push of capturing the tax credits, since it's not in danger of going away until I thought it was the end of 2017, maybe 2018, there doesn't seem to be a whole lot of urgency for First Solar. By far, huge upside potential. It's an amazing opportunity for a big return, but First Solar has moved more on news and tax credits than on technicals or seasonality. So I would not be looking at First Solar. But there are two really good spread trades that, for myself, I would like both of them significantly. If you're not much of a credit, and something else we should look at, sorry about that. I've been looking. It looks like we lost some sound there for a second or two. I was just looking at a bull call. Bull calls usually will have a little bit less risk, but they're easier to adjust than a bull put. I would be choosing a bull put because I am willing to take stock ownership if I had to. So for me, I mean, in this particular, and this is only paper trading, so it doesn't really count, but I would definitely be looking for five contracts here. Come on. Sorry, it's my internet. I'd be sticking with that bull. I'd be sticking with a bull call there. Nope, bull put. Excuse me. I'd be sticking with the bull put on the understanding that I would take stock ownership. In this particular account, I am losing 300 shares. And in fact, most of my accounts, I am losing 300 shares at the $100 strike price. So because of that, I have some extra money to take advantage of a bull a bull a bull put. So I could create a couple of condor, huh? Interesting way to look at it. Interesting thought process here. Already missed the dividend payment for these guys. But pretty easy to create a bull put and be good to go. And this I want to change down to 100. I don't know if you guys have seen this application, but here we have, again, I like, they call them monopoly tiles. I like the tiles for Options House. Normally it goes a little bit quicker. It's my internet at home, sometimes goes a little bit slow. But my expectation is, hey, I'm going to take a bit of ownership here on at least 5 of the contracts. And there I go. A price of 55 cents. I would just submit that on off, and off we go. Guys, any questions? Any questions about the trades? Any questions at all? If not, guys, I appreciate your time. I will email out these notes to you. I'm sorry I lost my sound there for a bit. I actually hit the mute button on my my microphone. I do apologize for that. But I appreciate having you here. I look forward to seeing you next time I substitute for Jeffrey. Thank you very much for your time, and I will talk with you guys again soon in the near future. Have a great week of trading, everyone. Bye-bye.